Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic what I'm trying to do for the small investor. When I entered this space of professional work in the financial field, which is after a good 20 years as an investor, one of my close friends asked me this question, and he is a very respected name in the industry. Why do you need to do this? Obviously, he knew that I'm not a person who do something just to create revenues or just to build some kind of a cash engine, because in his assessment it was far better for me personally to stick to investing, because that would be far more rewarding than doing anything else. So this desire of mine to actually venture into mutual funds about 13 years ago after the GFC and to build something there was a shock to him. He kept asking me that, do I really need to do this? But I was of the view that there is a great opportunity for small investors to become dollar millionaires, and I am saying this in 2009. And all they needed was some sensible handholding, responsible advice, and sustained guidance. And most people were not getting this. As luck would have it, the thoughts changed over the next 5 years that investors must do everything on their own. This is not wrong. I am an investor who has grown on my own. So I didn't have anyone guiding me professionally. I had only personal guides who are so generous. But we don't live in times where people have so much of time to give others. So professional time of people is so tight and scarce. No one has the time to guide others. So the only way I could be of any value to others would be as a professional. I did not believe that informal way of helping others is going to help others or us, because there is no accountability in that. That was the primary reason why I chose to enter the mutual fund space, and I started by doing fund research. I already had a very strong base in equity research. I extended my skill set into fund research, and we came up with some very, very interesting observations as soon as we entered that space. First, we found that the funds which had billions of dollars were not investment worthy, and the funds which had 100 crores was worth investing. And we took a small set of investors into those funds and started making them invest in them. The results were very nice, and they kept scaling up over the next decade. Today, many of them are into PMSs, and they are still with us. But over a period of time, we tried to deliver advice and guidance in line with regulation under different channels. One was the MFD channel, the other was the advisory channel, which we call as the RIA. I found that while we are giving the advice to another person, that person is exercising enormous discretion on whether to accept this advice or not. Often, the discretion is not backed by knowledge, it is backed by crowdsourcing of opinion, whereas we are giving a very specific opinion to suit him. And the way in which they were handling themselves after receiving the advice was not helping them. So that is when it occurred to me that I should actually work with very small investors who will respect the advice that is given and who will take that advice sensibly and who will act on it with discipline for long years. While it may not be very remunerative, because somebody making a 2,000 or 5,000 or 10,000 SIP is not going to remunerate you much, I felt there is more meaning in that to me as an individual to guide these people rather than guide people who have opinions on everything but don't do their homework and sit on judgment on advice given. It made no sense for me to advise people who think they already know. So I decided to work with people who realize that they don't know, who will basically raise their knowledge as they work with us and evolve to keep judging advice sensibly and looking at their own experience with us to use as a very good point of validation. That is when I decided to start a new way of helping investors, which is milestones to wealth, where I want every investor to reach 5 milestones, the fifth one being 50 lakhs. At every stage, an investor will have to prepare himself to go to the higher level. And if somebody starts very young, I believe that he would reach there in very quick time, and he would be able to reach there faster than he otherwise would on his own or under random investing. So we wanted to create a very systematic approach to investing, where they do an SIP, they step up their SIP, they make lump sums whenever they have money, they save some money in liquid funds for a rainy day, and then when the markets are more favorable, they shift little bit of money from debt to equity. When the markets become too expensive, they move some money from equity to debt. When gold was cheap, we made them invest in some gold investments over a sustainable period of time. When gold becomes very expensive, they move little bit of money from gold to equity. So all these switches are things which we want to happen for the small investor, and we have chosen to do this under the distribution channel. The reason being that it is not effective to work with small investors as an advisor. It is not cost effective, nor it is efficient, because the investor is not able to act on time, he is not able to judge the advice, he has to still prepare himself much more before he can have a mind of his own, where he exercises judgment on the quality of advice that we are delivering. So that is something which I have made up my mind, and I am working in a much lower space with much smaller investors, but with a much bigger dream of making it happen for a lot of people. What would happen if we are successful with Milestones to Wealth is, we would create thousands of investors who are very small across the country, whom we will be advising on how to invest very small, decent sums of money with great discipline towards larger goals in life. And we would ensure that their investment experience is very moderate, cost efficient, and certainly well run in terms of risk management, in line with what is their risk appetite and risk profile. So all these things are elements which we have brought into a very, very simple investment process, and the process is simple, but all these elements which we bring to this process are definitely very, very valuable, and these elements are seen in very sophisticated financial products which you may buy later in your life. So you are already having that sophistication of doing everything in line with your risk profile, doing everything in line with your risk appetite, doing everything in line with a good investment process, achieving scale with discipline, and always managing risk dynamically and staying out of trouble all the time. So all this is something which you need to do when you become a larger investor, but I believe that you need to do right from day one. Only then you will make it a habit when you become a larger investor. So this is what I am trying to do with the small investor, and I am trying to do in a way which I believe will create a lot of confident investors in the future. I know this is not very attractive when you compare with running an AIF or running a very high profile PMS, but I believe that this is very important to me, and this is still in line with what I began 13 years ago, and it's still going back to the drawing board and helping a whole lot of people, a very large section of people and a growing section of people who really need it. So that in essence is what is my motivation to do this, and that's what I think will keep me motivated over the years doing this. Thank you for watching this video.